What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. And a special shout out to the trader who requested this video, okay? This video, I'm going to break down the quote from Paul Tudor Jones that says, "Always think of your entry as last night's close." All right? But for this video, we're going to switch it up just a little bit, okay? Forgive me. We're going to switch it up just a little bit, no disrespect, and say, always think of your entry as last week's close, all right? Now, you're probably looking at this chart like, what the heck is this, all right? This is how I'm going to explain this quote to you. I'm going to break it down to you. Now, first, let's get this out of the way, okay? This is not a strategy, right? This is a thought process. Sometimes you will have entries and trades occurring at or around the previous close. All right. Sometimes that is an entry. That is a level where we take trades from. Once you know exactly what you're looking for. Okay. And I tried to explain that with that last video using that 1 minute chart and showing that consolidation right above the closing price. You know what I'm saying? And you would have got an entry right at the beginning of the 9 o'clock hour. All that. That is an example of when you know exactly what you're looking for of trades right at or around closing price. But that's not what that quote is about, okay? So the quote is more of a thought process. It's a way of thinking about the market and price action, all right, based on key levels, right? The previous close, the close of each week, all right? Because sometimes it can help when you're trying to come up with trade ideas to form a narrative for what you're seeing on the chart, right? For the price action that you're seeing, you want sort of like a story to go with it, because you're going to understand things much better in that way. That is what price action is telling you, right? It's telling you a story, a historical story of price data, where price has traded, right? And you can put it into a narrative form in many different ways. There's many different ways to like interpret it, okay? And this is one of the ways that you can think about it, all right? I hope that makes sense. Now let's explain what's going on here with this chart. I've done a few simple things. I've added a few simple things on this chart. So the red vertical lines are separating the weeks, okay? So this is the last 8 weeks on the dollar yen, all right? And what I've done is I've circled the previous week's closing price and then projected it onto the current week with a black trend line, all right? So there's a trend line coming from each one of those circles, and that is denoting the previous week's close, all right? Then I've highlighted the price range between the previous week's close and the current week's close, all right? And that is what we will refer to here as the inside. That's the inside. When we're talking about price action, we're on the inside. If you're inside of that yellow highlighted area, in between the close and the open, then you're on the inside, all right? Now, look at week 1, that's all the way over here on the left, okay? And remember this fact, that on any day or week, we can expect price to do one of 3 things: give a higher close, a lower close, or an equal close, right? So you can see that week 1 that I've highlighted, okay, gives us a higher close, than the open, right? So think about this. This is what you're going to be saying to yourself as the weeks progress or as the days progress. All right. I like the weekly charts because it's nice and slow. I can take my time. You know what I'm saying? So if you bought this market at or below last week's close, then by Friday, you're holding on to a small profit, right? On week one, that first highlighted week. If you're a buyer at or below last week's close, then you're in the money by Friday. And then the second week trades and gives a lower close. So the market will every week, every day, right? It opens here and closes there, wherever that's going to be. So you can see week 2 gives us a lower close. So if the trader who went long at the previous week's close on week 1, if they have not closed their trade and taken their small profit, by Friday on week 2, they have been stopped out, right? If they didn't have a stop loss in, their account's probably blown, right? Okay, so they're hurting if they did not take any profit right there. Now, any trader who shorted week 2 at or above the previous week's close is holding on to a handsome profit by Friday, right? They're in the money and pretty nicely, okay? And you can see week 3 gives us a higher close than the open, right? So any trader who bought this market at or below the previous week, so week 2's closing price, then by Friday, they're holding on to a small profit if they bought, right? And now look back at week 2 and remember that anyone who shorted the market at or above the closing price of week 1 is still in the money when week 3 closes, okay? It does not go up and close above week 2, right? So any trader who shorted it up there is still in the money when week 3 closes, even though it gave a higher close, okay? Then week 4 opens, and you can see immediately, right? Week 4 gives a lower close than the open, right? It trades lower. So any trader who shorted the market at or above the closing price of week 3 is holding on to a substantial profit by Friday, all right? And remember, some traders went long at week 3's open, okay? And at some point, they're taken out of the market. If they don't take their money at the close of week 3, then by the time week 4 trades, they've been stopped out of their long positions, all right? And also remember that any trader who shorted the market at or above the closing price of week 1 is still in the profit from all the way back there, all right? They're still in the profit when week 5 opens, all right? And they got a nice profit, all right? So week 5, you can see it's all the way at the bottom. It's a small highlighted area. It's a small range in between those 2 price points, right? And ultimately, it gives a lower close than the open. So anyone who got in at or above and they sold, right, at or above the closing price of week 4, then they are in the money. They have a small profit when the week closes on Friday, all right? And anyone who shorted the market at or above the closing price of week 3 and week 1 is still in the profit, a very nice profit, okay? Then week 6 opens, and week 6 gives us a higher close, okay? And it doesn't just give us a higher close, it actually engulfs week 5. At least the range right here, right? It engulfs the range of week 5 that's in between these two significant price points. All right, so any trader who went long at or below the previous week's closing price on week 6 is in the money when the market closes on Friday, right? And that, as we can tell in hindsight, is the bottom of that market. I just want to point that out to you. That's the bottom right there so far, right? It looks like the bottom. If that is the bottom, which it looks like it's proved to be for the time being, the bottom, the only people who are trading that are institutional traders, professionals, right? The big guys, and the small percentage of institutionally minded retail traders. That's the only people catching the lows and catching the highs, all right? And if that's the case, if that is institutional money that's getting into the market there at that low and shifting the market higher, they're doing it for a reason, and there's a vested interest in protecting those long positions that are in play at the low of this chart that we're looking at, right? So that's why in the future, price does not come back through that and continue lower, because that's where smart money has gotten in, right? Okay, so when week 6 closes, all right, notice that anyone who shorted the market, right, at the previous close on week 4 and week 2, if they shorted, they're still in the money, okay? Even though we got an engulfment there at the low and we got a higher close, those traders are still in the money. If they have not taken a profit out by the open of week 6, right, they're thinking that week 7 is still going to trade even lower, right, and just keep on going. They're getting a little greedy, right, but they're still in the money. Now look at week 7. Week 7 is a small range. It gives a lower close, so any trader who shorted that market at or above the closing price of week 6 is in the money by Friday when the market closes, okay? And anyone who shorted the market from the open of week 5, right, they're still in the market. Or week 6, sorry. If anyone went long there at the open of week 6, they are still in the profit with their long positions. And when week 7 closes, still anyone who's short from week 2 and week 4 is still in the profit on their short trades. All right. Then week 8 opens. Week 8 gives this very strong bullish move. It engulfs everything here that we're looking at. The past 7 weeks or whatever are engulfed right here. So anyone who went long at or below the closing price of week 7 is in the money, a substantial profit, right? And anyone who is anyone who is long from the open of week 6 or whatever, right, from the low right there, the open of week 6 is still in the profit at the close of week 8. And I know this might get hard to follow, you know what I'm saying? But you're doing a great job if you're still here and you're still following along with this, okay? Also, when week 8 closes way up high like that, it takes out those traders who were short week 4 and week 2, greedy, still holding on. And at this point, if they haven't taken profit, they deserve to be stopped out. They're idiots, okay? They're greedy. okay? So I hope that you can understand sort of the thought process here, using the thought process of always think of your entry as last night's close or last week's close. It's a thought process here to figure out who's in the money, you know what I'm saying, from previous moves, you know what I'm saying, all of this sort of thing. I hope that that makes sense. Now, also, I want to point this out to you that because I've highlighted just the range that's in between the open and close of each week, this is the bodies of the weekly candles, basically, right? With no wicks. This is just the bodies of the candle with no wicks on them. That's all it is, right? And we're using the information that's presented to us with the candles. It's basic information, and we're using it to form a narrative here, okay? When it comes to that highlighted area, that yellow area, because this is such a high time frame, we're using weeks. Once you get some confirmation, right, like at the bottom here, week 5 and week 6, the market looks like, it begins to shift and turn bullish. You can zoom in and start looking for bullish moves on the day, right, in these bullish weeks. You'll be looking for bullish move because that's a week, so there are days in there that close higher, right? And you can play those days with the same information. Okay, we're just looking at it here on the weekly time frame because it just makes sense, all right? And everything that's highlighted inside of that range is nonsense, okay? It's nonsense, meaning you don't want to trade it. That's not to say if you're in a trade and your trade is going through that range, right? Like you're previously in a trade, then it's fine to be trading within that range. But I'm saying your entries into trades, where you want to enter the market, is not inside of that range. Your entries are outside of that range, where the wicks would be on this chart. You understand? Do you get that? And those are the highs and lows of weeks. And like I said, we don't trade the highs and lows. We're looking for confirmation, and we're looking for it in a certain way, utilizing closing price, right? So far. Next, we're going to start talking about the high and the low of the day incorporated into this sort of information. But I hope that this explains that quote for you. It's not a strategy, right? Not in the way that we're talking about it here, not in the way that Paul Tudor Jones is talking about it. It's not a strategy, but it could be implemented into your thought process, into your strategy, right? But this is not saying that every single trade you take is going to be taken at closing price. That's not what it's saying. It's not saying every single one of your trades, your entry should be closing price. That's not what that quote means. It's a thought process. And this is how you use the thought process. You're using it to say, okay, anyone who went long at or below the previous week's close on week 1 is in the money when Friday closes. So that's where the profitable trades are. Now you know where profitable trades are, so you know where those traders got into the market, and you know just about roundabout where they're going to have their stop losses, okay? It's going to be the low of that week, right? They're going to probably have their stop losses below the low of that week. And so if price is going to go take out those orders, it's going to have to trade below that to take them out, right? And you can see that on week 2, because obviously this is in an even higher time frame, bearish template, right? Prices overall, it's been moving down until week 5, week 6, when the market starts to shift, right? So it's been trading down. So it might go to take out any longs, any people who are getting in there thought that they thought that they caught it, you know what I'm saying, at the right time to go high or whatever. They thought it was going to do it, but it didn't, right? And they didn't take any profit. They could have taken profit, but if they didn't, the next week comes and takes them out, okay? And then, right, you just follow it. You're just following it along. When week 2 opens, when week 2 finishes, you're able to say, okay, so any trader who went short at or above the closing price of week 2 is in the money by the time Friday closes. So that's where the profitable positions are, right? So price at some point might take those people out of the market. It's not going to let them stay in forever and just keep trading lower forever and ever and ever until those people make $1 billion in a single trade or something like that, right? You get what I'm saying? Anyway, man, I hope that this makes sense. Until next time, I hope you continue to free your mind.